So someone I always respected, just knowledge based, always did her research. So tonight we have IRS enrolled agent Amber Storms. She's on the call to talk to us business owners, and she's going to give us her specialties, right? She's gonna do her thing and let us know, what to look out for as a small business owner. And when we say business owner, I don't mean like, you're small, you only have two clients, but as a business owner, what we should be looking out for to stay in compliance. Things that, when you start your business, the last thing you're thinking of is paying taxes, right? You just want to get up and going and get your logo off of Canva and try to make some money. So, Amber, I'm going to turn it over to you and you do your thing.
Thank you kindly. Thank you for the great introduction. So, hello and howdy, everyone. As Eddie said, I'm Amber Storms, EA. I've been an enrolled agent since 2013, and there's only about 50,000 of us nationwide. We're a very small group, and we dedicate ourselves completely to tax, not just preparation, but consultations. My favorite, correspondence. If you get a letter, I'm your girl to call. So I'm really happy to work with taxpayers. I've always been somebody who's been fighting for the people and want to do more for the people. Originally, I wanted to work with the IRS, but then I said, no, that's not really for the people. Let me get down in the field and actually share the knowledge with everyone. So I'm really glad everyone is here. And one of the questions that I get most often, I would say, is when it comes to businesses, a lot of people want to go out and live their American dream and how do you say, want to go out and live their American dream and go start their own business. But in that excitement and that eagerness, what'll happen is they will go earn the money, not track any expenses, not register properly, and then end up with a whole handful of problems come tax time. So my goal here today is to help educate you folks so you know exactly what to look out for. I actually put together a slideshow for everyone, and I'm going to attempt to share my screen. All right, let's do this.
And then if you guys have questions, drop them in the chat or either
Yes,
raise
ma'am.
your hand. And then at the end of the session, we'll have a quick brainstorm.
Mhm.
Right on you, Amber.
All right, for sure. All right, there we go. We're going to share this screen here.
Go.
All right. Can anybody see that?
Yes.
Awesome sauce. All righty. So here I am in our website, just in case you guys have any questions at all. Go ahead and go down to this next slide. So I'm just going to go over the basics, what you need to know. We're not going to get into anything too technical like depreciation adjustments or anything funky like that. Just kind of the aha kind of things you need to know. Um, give you an idea what we're going to be talking about. Number one question to tie back to that is how should I be structured? Should I be an LLC, an S corporation, sole prop? What's the difference? And we'll talk about incorporating business software to make your job easier because technically you really want to be spending time focusing on running your business, not so much back of house. You want to be front of house with your clients or customer base out in the field making deals with your vendors, not stuck trying to reconcile your books in a composition book. I know you guys remember that from junior high. And then we're also going to talk about home office, like how that all works, what should you track, um, what things aren't deductible too, and some other things that people don't normally think of. We'll also hit travel, business versus personal. How do you draw that line in the sand? And then the investing tips and tricks. We're just going to go over generally over this subject. There's a lot of, it's very information heavy, so we'll be sure to share this with you after our presentation. But we'll talk about what crypto means, long-term versus short-term gains, real estate investing. And then lastly, we'll discuss social media tax advising. No, please, no, 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 no. No more TikTok tax advice. So, well, and actually, I'd love to hear what you folks have seen online, and if you think it's true or false too, and we can discuss that because I can't see it all, and I love hearing about the new tax schemes. So, you guys got to bring it on at that point of the presentation. Before I jump in, did anybody have any pressing questions or anything I'd like to mention? Right, sounds good. Let's get on down here to getting structured. This is so important. Um, a lot of people, when they start out in business, they want to go instantly to the LLC. which is cool. But you don't necessarily have to do that. And as you can see, you're going to be looking at like not only just the self-employment tax, but if you take out withdrawals, will be guaranteed payments at some point. There's a lot, and not only that, you're going to have to file an extra business return with both the federal and state, depending on where you're located. Usually, that's not our favorite thing to do. When we're first starting off, we kind of want to start off simple with this sole proprietorship. Love the sole proprietorship, just a plain old Schedule C on your tax return. It's considered what's called a disregarded entity, which means the IRS doesn't regard it as a separate entity. You and the entity are one and the same. You can still pay yourself. You're going to get pass through taxation. You're going to pay self-employment tax because you are your own employer. So that's something else to keep in mind. And that's something I can help you with too, like determining what your estimated tax payments would look like. How was that calculated? What's it based on? So we can definitely go over that. One thing I try to discourage people from going for is going for that C corporation. My sweet spot's the S corporation because you can set yourself up on payroll, which is huge because you can, even though you're your own boss, you're an employee. So you're going to have your own, you can hire a payroll company or you can even use QuickBooks and tying over to software as a service. Use QuickBooks to run payroll for yourself. And then you can go ahead and take officer salary and have yourself a guaranteed salary and then still take distributions. If you were a C corporation, you could give yourself a salary, sure. But then you're going to end up getting dividends. And that's where we come into that term that we've been hearing about double taxations. So you're paying like the corporation's going to be paying tax, your actual business, and then you personally are going to be paying tax on the profit that you take from the business. So I usually say, no, you don't want to do that. That's not only a hefty filing requirement, you're paying a lot of tax. Not fun. So yeah, I definitely want to say that S corporation is a sweet spot. Now, as for partnerships, they're cool too. You just be responsible for paying self-employment taxes. It's not a disregarded entity. You will have to file a partnership tax return. Um, you will have to file partnership tax returns and then furnish what's called Schedule K-1s. Any kind of pass-through business, you just like you get a W-2 as an employee, a Schedule K-1 is your report, your share of the income loss and deductions from the business. So you want to make sure you generate that for every partner or shareholder in the business. Before we go on, I think I've summed it all up. What do you folks think? Anybody have any questions?
No,
All
I think
right.
just power through it, and then we'll have some questions at the end. If you guys have any questions, drop them in the chat, and we'll go over it at the end.
Oh,
We just
sweet.
at your time.
No, no problem. All right, so it's getting sassy talking about software as a service. People, we live in the digital age. We need to work smarter, not harder. It's not, we don't need to smooth that out the way. We need to work smarter, not harder. So you use software services like QuickBooks Online, which is my personal favorite. You can get the app on your phone and actually have it online on your laptop too, so you can access the data anytime you need to grab it. Xero is a pretty popular one too, as is FreshBooks. Um, Something else you want to look into is tracking your mileage. If you're self-employed, you want to make sure you're tracking your miles because every mile counts. They raise the mileage, business mileage rate every year. This year it is what, 62.5 cents per mile. Um, so you want to, a lot of people will prefer to use download an app and just basically like it's like the tender rule swiping left for personal and right for business, and then logging your trips that way. Stride's another popular one that seems to be pretty easy to use. Payment processing, once again, it ties back into QuickBooks, but some folks want to get Square or Stripe some other way to accept payments too, not just sending out. I mean, through QuickBooks, you can send out like invoices and links and whatnot, then they can pay that way. But you want to kind of cast a wider net as you get bigger, and maybe you want to open up different payment processing methods. One thing I forgot to add in here is CRM, your customer relations module. Like, what are you using to manage your clients? Are you using something like Canopy or Smart Vault or Zendesk? That might be something you might want to keep in your back pocket for later, something to help you manage your projects and tasks so you're not trying to manage your business from a series of emails and your calendar, because that becomes disastrous and eats up a lot of your time. Going on to AI generation. AI is like the new thing right now. So that's the new biggest thing. And to be honest, I'll use it to kind of build a framework of what I'm trying to establish, whether it be an IRS letter or I need to come up with an Excel formula. Um, ChatGPT, Poe, Midjourney is also a fun one. A Night Cafe is my absolute favorite. You can actually create art with this. And depending on what kind of industry you're in, maybe AI art would be something that's helpful to you to generate like marketing or ads, something to that effect. All right, now we're moving on to travel, like business versus personal. Now I do have a flow chart here, and that's usually where it starts. You want to keep it nice and simple. Like number one, did you travel for business? Yes or no? And if it's no, clearly it's not deductible. And then you go on, so on and so forth. Um, Now, excuse me, when we come down here, actually to the fourth point is where it gets important. Did you incur any ordinary necessary expenses, like business expenses that are directly related to your business? If not, no, they're not deductible, but yes, they are. Now, if you have some personal expenses included with this, the cool thing is that you can kind of draw that line in the sand. If you say you're there for 2 days and then one day was business, one day was personal, then we can draw those expenses. We could draw like the line in the sand, say 50% business, 50% personal, not deductible, which is a perfectly reasonable way to allocate your expenses per the IRS. So that's okay as long as you keep it documented. Record keeping is your best friend when it comes to business. All right. And speaking of which, should you maintain proper documentation, receipts, your itinerary, business purpose? That's the thing. If the IRS chooses random people, about 500 people every year to audit, and audits are nothing to be scared about. They just want to make sure what you report on your return ties back to your source documents. Like, are you being truthful? Because it's on the honor system. Now, if you keep good records and how you came to these figures, an audit is a breeze. I've actually had an audit be completed in 30 minutes just because the records were so clean. We just hit all the points. We were able to justify everything we reported. Bada bing, bada boom, no change. And that's ideally how I'd want it to go for everyone. And even if you don't have records, you can always reconstruct records too. Whether you're using Google Maps to reconstruct your business mileage, like how far was it from A to point B, or you can use, say, for example, you don't know exactly how much this plane ticket costs, but you knew at this time, around this time, it costs X amount of dollars, and you can use comps. That might be something else to keep in mind, but you always want to make sure you are really clear in what is deductible for business versus personal. All righty. And in fact, sorry, I went a little ahead there. And we'll make sure to share this with everybody too. And this is what I was discussing here, the allocation between business and personal. You just have to you have to decide and be able to substantiate that. Like one of the TikTok things I have seen, which drives me crazy, is throwing a birthday party for yourself as a business expense. You're walking a very thin line there. You'd have to be able to justify that. For example, it was for marketing. You invited all of your business contacts here. You had it catered for this reason. You like you have to somehow show that there was business involved in this. So once again, record keeping is your best friend. Make sure that you're able to, if you're going to take the deduction, make sure you're able to justify taking it. That mixed use expense. All right. All right. Went ahead again. All righty. Now let's see here. I'm actually going to jump back real quick to the home office deduction before we get into investing. Um, Now for self-employed folks, the home office tax deduction. Where do we start? Well, who qualifies first and foremost? Anybody who's self-employed, partners in a partnership, shareholders in an S corporation. If you have I'm sorry, an area dedicated exclusively to business, you can take a home office tax deduction. Now, that space could include your, like, for example, I'm in my office in the back of the house. I have an area completely dedicated to this. You could also use storage areas. Like, for example, I've had taxpayers who store some of their inventory or tools in their garage. That area also counts as your office space. Now, the way we calculate this is actually pretty simple, and you don't have to necessarily do this. You can do it just for fun, just for calculating. But how we calculate it is this. We take the total square footage of your residence, and over that number, the numerator will be your business square footage. So if your total square footage of your house is 2,000 square feet and your office is 10 by 10, 100 square feet, then it's a 100 over 2,000. So, and that's how we determine, we take that percentage and apply that to all of the house related expenses. Speaking of which, what kind of expenses are deductible? As it says here, like repairs, maintenance, upgrades only for the office space. Repairs and maintenance can be things to the house as well. Like say, for example, air conditioning. It's something that's going to affect the entire house, include your office. So that'd be something that might apply. Um, and rent, and that actually would go along with like rent or mortgage interest, utilities, homeowners insurance, which is a very common question I get. If you are, regular taxpayer, you're not self-employed, homeowners insurance usually is not deductible. However, if you are self-employed or a partner in a partnership, shareholder in an S corporation, um, though that insurance is a cost of you doing business. And that's hazard insurance. Some of us have to get extra fire insurance, extra riders, anything like that. And it also includes your security system too. If you have a secure home security system, part of that's going to be deductible too. So there's a lot of opportunity to maximize your expenses here. Now, for what doesn't qualify, I love this one, working from the kitchen table. Yeah, because it's not really your office space per se. And we have to be careful with that. If you can kind of partition off a place to work from, that's perfect. Mixed use spaces, that's a really ticky one. And I try to encourage people to just kind of stray away from that. Now employees, uh, this is where we have to draw the line for employees too. Now, if your employer requires you to work from home, or yeah, if they require you to work from home, then some of your expenses will be deductible. But if it's not for the employer's convenience, it's not typically deductible. Also, let me throw in a little side note, a little bonus knowledge here for partners and shareholders. If you have a home office, what you're going to do is set up what's called an accountable plan. Basically, you're billing yourself for the use of the office. So you get every month you tally up your expenses, and you're going to take um you're going to bill yourself for, I'm sorry, you're going to bill your business for that, and then you'll be paying yourself back, and then the business gets to take the tax deduction for the accountable plan for the home office. So it works out pretty nicely there. All right, let's scoot on down to investing tips and tricks. When crypto first came out, everybody, yeah, I know people were a little skeptical about it, and people started diving in, and the IRS they were kind of behind the ball, and they're just now coming with legislation to kind of get caught up with modern times. So a lot of people back in the day, they wouldn't report their crypto transactions. They just kind of just let it slide. And that's not the case anymore. So if you have any kind of crypto transactions where you're selling crypto, the gains are taxable. Now, mind you, you can take losses too. You can take up to $3,000 in losses per year, but you will recognize some capital gains. And the next bullet point, buying the crypto is not taxable. It's not a taxable event. You don't owe anything until you actually sell it, because then you have to see what the net difference is. Am I at a loss, or am I at a gain? Oh, and another good one is using crypto for a type of sale. If you're paying for a good or service with crypto, it is a taxable event. So if that should ever happen, you want to make sure you keep the details of that, so you make sure it's reported accurately on your return. And now moving on to capital gains and losses, the holding period does matter. You hold anything less than a year, it's short term. Anything longer than a year is long term. They're more favorable tax rates. Ordinary income rates, that's just whatever you pay your income tax rate. For example, if you're 15%, then if you're the 15% effective rate, then you're going to be paying a 15% rate on your short term gains. That means that you buy it and sell it within less than a year. Now, long term, your capital gains rate drops and it's much lower. We'll discuss that a little bit later too, because there's certain brackets to where you're in a lower rate. And you can use losses to offset gains too. And you might see here that I've also highlighted record everything, especially now the IRS has now changed a new rule, or updated the rules now. So you won't be able to, or you won't be able to use FIFO like you used to. You won't be able to use gain and loss reports. You actually have to put a little more work into it and not use cost averaging. But once again, it's kind of like on a case by case basis, and it gets a little technical. Oh, and this is another big one too, with reference to mining, staking, and earning crypto. Mining is taxable. I have mined and I have paid tax on my mining because you're earning income, you're earning passive income. So that would still be a taxable event. Staking, it's the same difference. So even if you're getting paid in crypto, it's still regular taxable income. Same thing for airdrops and forks. And as for reporting and compliance, I know Coinbase is not the best about it, but I know like Robinhood, for example, their tax worksheets are fantastic. They're really easy to read, the loss and gain reports. Some exchanges don't always record things for you. They'll give you a CSV file and say, have at it, Hoss. And for a lot of us, we don't have the technical knowledge to deal with that. So if you can't get that, I would suggest you reaching out to a bookkeeper or somebody who's really knowledgeable and those kind of things. I can also help with that as well and getting that tallied up because you don't want to overstate or understate because it's just a big mess either way for you. And a side note on foreign crypto too, if you do use foreign exchanges or you have a foreign bank account, foreign assets, you might have to file what's called an FBAR or a fat cut report, basically saying, hey, I have these foreign assets. They're sitting over here. I'm not laundering money, I assure you. There's no taxable event there. The IRS just wants to know that you're not laundering money in a foreign government. I'm pretty sure most of us aren't. Oh, most people are in Congress anyway. And moving on, make sure I didn't miss anything. Let's go on to real estate investing here. Knowing the tax benefits of rental properties. Um, a lot of us have second homes or Airbnbs or whatnot, and they want to generate some side income. Now, keep in mind that that income is taxable, but you can offset that income with so many different expenses. In fact, a lot of people use it to do what's called loss harvesting. You can also do this with stock sales and crypto, where you sell underperforming assets so you can maximize your loss because you can use that loss to reduce taxable income. Same principle applies here with your rentals. Maybe you want to max out your losses and take up to, you can actually deduct up to $25,000 here in losses. But once again, you want to make sure you're keeping records for that kind of stuff. We're going to step back here to depreciation. It's basically a deduction you get for the wear and tear of the building, and it's just like the slow boat deduction. You get to take a chunk of this wear and tear over 27 and a half years if it's residential and 39 for commercial properties. And as always, land isn't depreciable. If anybody tells you that, they are lying. Only the building and certain improvements and components of the building are depreciated. Some kind of deductions you want to look out for: mortgage interest, of course, property taxes, repairs, HOA or management fees, any kind of insurance. Let's see, warranties as well. A lot of folks will get an extra warranty just to make sure they're covered there. The utilities expenses if they're paid by you, and it does include cable or telephone too. And as I mentioned, property management, HOA fees. You want to make sure you're keeping track of any kind of improvements. A lot of people overlook this, and that's a lot of money. You want to make sure that you're keeping track of any kind of repairs you're making. Repairs are immediately deductible. It's something that just kind of just restores it, not to restore something back to its original use. Like we're installing something in the hot water heater, or you need to change out or fix the pilot in the stove. Those are repairs that we can go ahead and deduct those immediately. Now, with improvements, like for example, remodeling a kitchen or adding a deck, the big stuff, those have to be capitalized, which is basically just depreciating over the life of the building or improvement. Um, see now, as for real estate professional status, a lot of people do not qualify for this, despite what TikTok tells you. You have to work over 750 hours per year in real estate. Mind you, there's 2,040 or 2,080 full-time hours in a year. So you'd have to work quarter of that in real estate, and it has to be your primary business. It couldn't be the side hustle. Now, if that's your primary business, like you're an actual bona fide real estate professional, you can actually maximize that. You won't be limited to your 250, I'm sorry, $25,000 rental loss. You can actually expand that and deduct more in losses too. Now, with short-term rentals like Airbnb, they might be taxed a little differently only because if you rented for less than 14 days in the year, the income's usually tax free. You just take the income up to the amount of expenses, and it's usually a wash. You can't recognize a loss. But if it's more than 14 days, then we're up to the regular old rental properties or rental rules. I'm sorry. And tying back once again, we want to keep those detailed records, and you want to use some sort of accounting track software to track your expenses and your income. Credit check fees too, or something you want to make sure you have a separate class for, and you're tracking separately from the rental income. Let's see, and moving on down here. All right, so let's talk about why we shouldn't take any advice from social media. It's gross. There's just so much misinformation out there and outdated advice. I mean, the tax law changed in 2017 with the Tax Cuts and Jobs Act. Some people are still posting stuff on social media from before the tax law change. That's troublesome because then other folks are relying on that knowledge to prepare the return and end up getting a love letter from the IRS because, whoops, that doesn't apply anymore. That's not cool. And another thing I love sharing with folks is that one size does not fit all. This is especially pertinent for my professional gamblers out there. Um, some people, a lot of folks don't realize that you can't just off the cuff deduct gambling losses. You're only able to deduct gambling losses up to amount of gambling income, and you have to be able to itemize unless you're a professional gambler, which means this has to be your primary job. This can't be your side hustle. Um, and where other people will say, "Hey, I've been able to deduct all these gambling losses. You just have to do X, Y, Z." Everybody's tax return is like a fingerprint. What that taxpayer is doing might not apply to your tax situation. That's why it's so important to reach out. If you're in doubt and you cannot read the IRS regulations, reach out to a professional who's going to steer you the right way. There's a lot of scams and illegal tax schemes out there too, who are trying to push fraudulent tax schemes like, oh, here's the there's so many I can't even think of right now, like the reparations tax credit, or if you're a sovereign citizen, you get a tax credit. And they'll point to something fake online that some blog somebody wrote. Unless you can point it out in the Internal Revenue Code, you won't be able to get away with it. Following that bad advice can only trigger that audit that I was discussing earlier. You might get penalized, and as I've seen in some cases, you can end up with criminal charges because of the negligence or the gross understatement of the information on your tax return. Um, Now, I mentioned professionals, and that's the reason why you want a professional is because we have accountability. For example, myself, I'm an enrolled agent. I have to take an oath before the federal government to do my best for my taxpayers. I have a fiduciary duty to you to do what's best for you. I can't take any actions without your explicit permission. I have to do what's best for your particular situation. Now, influencers and people online, they don't care about you. They're there for the clicks. Everybody knows this. So they're going to tell you whatever's going to drive traffic to their channel. That's crap. Because if you get audited, where is this influencer? You can't use that for precedent. It's not in the IRS. I'm sorry. It's not in the US tax court where you can actually use that case for precedent and say, I can take this deduction because they found this in the court. No, influencers don't work that way. You will get struck down by the IRS, end up with an audit. And I don't like seeing anybody go through that because it's such a headache. Um, and another reason to reach out to tax preparers or professionals is we don't want to misunderstand how certain deductions work, like Section 179 deductions, depreciations, or drawing the line between the sand for business vacation or personal vacations. Some folks, like I said, will try to throw a birthday party and call it a business expense. Um, and they'll try to tell you that, hey, this is totally legit. Just because they say it's legit does not mean it is legit, because the IRS says they require those deductions to be ordinary and necessary for the business. And it's hard to say a birthday party's ordinary or necessary for someone's business. Um, Many moons ago, I worked at a big box retailer, big box tax preparation firm, and one of our competitors had a history of overpromising big refunds. The problem, what they would do is they would encourage you to file a certain way, or even some ghost preparers would do this, encourage you to file a certain way to take deductions that weren't yours, like the education credits or the earned income tax credit that weren't necessarily yours, just so you can get that big, ginormous $8,000 refund. Now, if you're caught, you could owe back taxes, interest, penalties, and the substantial understatement penalty is like 25% of what you have to pay. It's egregious. And then you might be banned from claiming future credits. Like you won't be able to claim the earned income tax credit for, say, 2 years, and then you have to ask for permission to claim it back. And that could really cause some damage to you tax wise. And we wouldn't want you to kind of fall in that trap. Um, and tying back to what I said before, influencers are selling a lifestyle. They're not trying to give you advice. Don't listen to them. And they love anything that's catchy, or as you know, people are fond of short phrases, short, catchy phrases to try to get your attention. Don't fall for that. Sometimes the best information is like not the most fun. So that's why we have tax professionals here to help you out and guide you so you can sleep at night knowing you did the right thing. Because the IRS is watching now. They have increased their enforcement efforts to watch for these kind of bad behaviors and bad actors out there, not just influencers, but those ghost preparers who are also acting as influencers, saying, I can get you the big refund, come to big money tax clinic and I'll hook you up. Yeah, you want to steer away from those people who are kind of guaranteeing you anything. They should be guaranteeing you accuracy, peace of mind, those kind of things. Always, always, always just consult a licensed tax professional. Enrolled agents like myself, we are federally credentialed, certified public accountants. They have their credentials on a state level, and tax attorneys are just one step above an enrolled agent. And we're legally bound to follow tax laws and provide accurate advice because we'll get dinged. And we take an oath, like we take our job seriously. We want to see what's best for you. We will tailor advice to your situation and keep you in the compliant zone. All right. So without further ado, I want to see if anybody has any questions. I know that was really information heavy, but I would love to take an opportunity to talk to anyone and see if I can address any questions.
I'll hop off mute. Thank you. That was amazing.
Thank you.
Amber has actually been my tax consultant for many years. So she knows I always have tons of questions. One, I really loved your PowerPoint because I think a lot of the times when it comes to like taxes, it's one of those things that if you're just not in you're not a tax person, it's something like
Hmm.
not that it's not cool, but you don't, it's a numbers. Like if you're not a numbers person, you're kind of like, but what I really loved within your presentation is that you brought it back to like just talking to an everyday person. So like the social media was awesome. The influencers. So I put in the chat, it's called clickbait. It is for
Yes.
likes, it is for views. And, you do have to use discernment on who you listen to. There are a couple questions in the chat that I will ask you, and I do have a couple questions
Love
as
it.
well. So when you're starting out, I'll just start here, but
Hmm.
um, if you're starting out, I know you mentioned you can do bookkeeping as well. So you do offer bookkeeping, and which is great because again, when you have somebody who does your bookkeeping and your taxes, it's cohesive, right? Like they go together. You're now in that. But what do you suggest for somebody starting out? I know that you are somebody who has always suggested to me like QuickBooks. Is that like at what point do you feel, because we do have people in here where we are teaching them how to go from a hobby to a business, all
Hmm.
the way to, like you were saying, real estate investors. Like we have high level business all the way to the hobby starting a business. At what point
Hmm.
does somebody take on QuickBooks, or do you suggest like Google Sheets? Like what is just like, if I were just starting a business, would you tell me to get QuickBooks and why? Or is it like,
Hmm.
no, but here's what I would suggest? So what do you suggest as far as like tracking? Because that's the biggest, and I think you opened up the call with that, that, most people aren't tracking.
Right. And that's such a great question. I'm so glad you asked that. I always recommend clients go with their comfort level. If you're more comfortable with Excel and Google Sheets, you can stay there. Once you go outside that comfort level where it starts to become too tedious for you to track, that's when you might want to consider uh, evolving to that next level and getting QuickBooks Online. The reason why I'd like to suggest QuickBooks Online from the jump is because that's what you can start. training your books and start tracking expenses, income, and such from the beginning of time. You don't have to import data and then transform it a different way, make sure things reconcile. It might sometimes it's just best to start off with QuickBooks just so it's already set up for you. The cool thing about QuickBooks is that they also start you off with a very basic chart of accounts too, like your income, or we'll say your revenue, very basic expenses like auto accounting, advertising, utilities, and you can train it to recognize your expenses, and then you could just run it through like your business bank account. Ooh, more questions.
Sorry, I was trying to find it. So I'll read the questions in the chat. So Jennifer
Thank you.
says to touch on that in regards to records, do we need to keep the actual receipts? And you know, this is always my question. Do we need to keep the actual receipts of everything, or can we just put it in a spreadsheet and take photos of the receipt?
Oh, excellent question. And you can actually take the photos of the receipts. Bank statements are also helpful too. If you can't, because as you know, carbon copy receipts, they will fade over time and then just be bleh. You can just take the scan, or you can, if you've lost that, you can use your bank statement too. It's another reason why I recommend using, if you have a business bank account, make sure you're running everything through the business bank account so everything comes up in your statements.
So on that, to touch on that. So for
Mhm.
example, I've always just been somebody who kept receipts, and in my mind I was like, well, because maybe I need to itemize it. However, I don't I'm getting to a point in my life where I just want to shred all the receipts. I don't want to keep them anymore. And
Mhm.
even, one of my business partners always says like, I have my bank statements. I don't need like, why do you have all these receipts? So is it enough to just have the business or the bank statements without it being itemized?
Yes,
Or
you
do
can
you need to
absolutely use that.
itemize? Okay,
If you're, yeah, especially if you're running it through the business, you probably won't need that receipt more than likely, because if you're running through the business bank account and it's uploading directly into QuickBooks or whatever accounting software you're using, it's easy peasy. And also, what a lot of people will like to do too, like say for example, you don't have your business debit card on you and you have to buy it on your personal debit card. You want to go ahead and keep that receipt, because you can take a scan of that and then upload that scan into the transaction, like into your accounting software, and then you can throw the receipt away because you already have a digital copy of it.
perfect. Okay, I have another
Hmm.
question.
Go
I
for
have
it.
one of my own and then one for the chat. So
Awesome.
my question is, I know that when it comes to taxes, and for myself, there we in our school community and on a lot of calls we've had, we really talk about having, like, a lot of it is a mental shift and shifting from,
Mm,
again, I'm not a W-2 employee. So we all know that there's two letters with an and in the middle that is very common, and we could just say it's H&R Block, right? And it's very common, and it's like, oh, I'm just going to go to H&R Block. And
mm,
for me, once I took on having you as my tax consultant, I realized again, like, actually, there's so much education that comes with this. And you start to understand, like you said, whereas sometimes it's very surface level when you're going to
mm.
just, again, you're going to a local, they pop up every season and they're there.
Yep.
Why do you think it's important to actually have, like you, an enrolled agent, like somebody who
Mm.
actually is looking out for your best interest versus it being like, why would you suggest small business owners find a tax preparer versus just going to their local tax pop-up?
Oh, fantastic question. I love this question. Um, First and foremost, you don't want somebody who's just putting numbers in boxes, because they're really not thinking about you, much like the social influencers. They're not really thinking about you. Um, it's broken my heart so many times to take on new clients who don't understand why they keep owing year after year. And that's because their prior preparer wasn't looking out for them and explaining to them, hey, this is what's happening. This is what needs to change for us to reach the goal. And they just gave them the paper, said, sign it here, pay the money. And that's really a disservice to taxpayers. That's the beauty of having a dedicated tax professional. Somebody's going to look at your unique tax circumstance, because everybody's tax circumstance is like a fingerprint, completely different. Somebody's actually going to look at those details and not just plug the numbers in. In fact, you guys know I've said, like, I like to go digging for dollars. It becomes a game, when you start looking out for those expenses.
Yeah, and one thing I really love as well, like you said, is they're not really looking out. And so working with
Hmm.
you throughout the year. And I think again, whether you're working with Amber, whether you do find a, a tax preparer, tax consultant, it's really important that it because I find in the tax game again, what happens is it's like we're still in that W-2 mindset where it's like
Hmm.
as a small business owner, as a business owner, like, oh my gosh, it's tax time. I got to gather everything together. Whereas I know with working with you, you're like, okay, we're halfway through the year. What are our goals? And that's one thing I've really loved working with you is that
Hmm.
again, you're on our team. It's a team, right? It's teamwork, not just again, I'm giving you my paperwork. So I have another question in the chat.
Hmm.
This comes from Jennifer, and I know you. And I again loved your slides. So you had being a sole proprietor. Then you went to LLC, you went to S Corp, C Corp. So it says, in regard, is there a certain level in regards to money coming into the business where you should be an LLC compared to an S Corp? And I do want to share on this because
Hmm.
personally, I have actually, you know how again the algorithm will pick up on what your mind is thinking. So
Yeah.
recently, since we have been having these business conversations, I'm noticing that my algorithm on Instagram is showing me where it's like you need to be an S corp, like if you're making X amount because you get to pay yourself. And I think again, we're following blindly. Like we're just like,
Mm.
oh, that actually sounds, wait, I should be paying myself. You're right. And we don't look at the things. So um to answer Jennifer's question, do you feel like is there a money level that somebody should go from
Mm.
sole proprietor to LLC to from a tax standpoint? I know there's Eddie
Hmm.
would have a business standpoint, but what is yours from a tax
Right.
standpoint?
All right, good question. If you were starting off as a sole proprietor, if you were expecting like the industry rule of thumb, it's not like a written rule of thumb, but if you expect your takeaway, your net income to be about 70 grand, like that could be your officer salary, that might be where you want to consider not moving from the sole proprietorship to partnership, but maybe go to an S corporation and then pay yourself that salary. A reason why I discourage not going to the partnership is because if you want to pull that as a salary, it becomes guaranteed payments and subject to self-employment tax. If you pay yourself on a W-2 as an employee, you don't have to worry about the withholding on your tax, end up with that egregious tax bill at the end of the year. And then just a touch back to that's something else with tax planning that we can look at. Like we want to see what's your net looking like, and because you need not only tax planning but financial planning. That's also part of it too. You need somebody who's familiar with your industry who's going to look at all this and say, "Hey, we need to step in and make some course corrections here before we end up with an ugly looking tax bill. Like let's buy some assets or run more payroll, hire somebody."
Yeah, amazing. Any other questions in the chat or anybody want to hop off mute? Here's
I,
one more and then I'll hand it to Eddie.
yeah,
Uh,
let me hop in real quick, Rach.
yeah.
You
Oh
know
yeah,
you're on a roll. Fabulous presentation, Amber.
thank
Um,
you.
One thing I hear on social media, just to talk about our social media influencers and friends, is
Hmm.
um, I don't throw birthday parties. I throw corporate events. All you got to do is turn your guest list into an attendees list and talk about a few deliverables at your birthday party, and all the champagne is a write-off, and all the food and hors d'oeuvres. Um, I know the answer to that, but just could you provide some enlightenment from a tax perspective?
Ooh, yeah, because that is some like thin ice. And you remember as we were told as kid, if something's too easy to do, it's probably like untrue because you'd have to really substantiate. If you were challenged at audit, you'd have to substantiate, well, why are these invitees like, or why are these people like now at a conference? Like, how do you justify that this was a business meeting? What did you guys discuss? What was the end result? How are these invited folks here, part of your business cohort, and you wouldn't really be able to justify that.
And one last thing, I just had
Hmm.
with a client, and he was asking me if he could write off all his dinners and lunches, and
Mm.
what is too much. And I don't ever give tax advice. I always refer them to you. But I told him that to remember the words ordinary and necessary. Um,
Music to my ears.
right. So I gave him the example of, doing a business dinner at the local steakhouse to talk about, he's in vending machines to talk about, their next move in
Sweet.
the logistics versus doing a business meeting and flying to Dubai, right? To have that same business meeting. So
Mm-hmm.
keep that in mind, guys. Ordinary and necessary is just like the keyword that I always advise my client.
Mm-hmm.
And I don't give tax advice because that's just not my forte. But that's
Mm-hmm.
all I have right now. I do have one more that I'll ask later.
Okie dokies. And you're absolutely right about that. That is direct from the Internal Revenue Code itself, ordinary and necessary business expenses. If you can't justify that it was ordinary or necessary, yeah, you're probably going to get an IRS letter.
So good. Go ahead, Sabrina.
Hi.
Why?
Sorry, I jumped on the call because Jennifer just posted, so I'm so sorry. I was at the end of the slides. So, but this is also
Welcome.
interesting. And I just wanted to ask, for example, I myself, I started the UGC thing, like 4 months ago. So the only income that I had in from September to December was just $200. And I
Mm,
did receive a product that it was a gifted collaboration. The product itself is over $3,000. And
mm,
I am
mm.
someone that like since I became a citizen, but I always like to do like I fear the IRS so much. I always do my taxes. I'm a server. I declare everything. And now so I have a CPA, but even though I haven't never worked with him in the entrepreneur, I just want to make sure that
Right.
he's doing the right things. So we're gonna have a call, actually a meeting tomorrow. And I wanted to
Okay.
know, just to have another opinion, like uh so is there a certain base? Should I be claiming all those $200 and that gift collaboration? Like what's when do we start saying like, okay, this is serious, or like I think that I should claim everything, you
Oh,
know?
got it. Yeah, no, oh no, totally good. And that's a really good question, because a lot of people start off with that question too. Thank you so much. Now, what the IRS rule is that you have to report everything.
Everything.
Now with the 1099s that you'll get with the self-employment income, the threshold is like $600. And don't forget, when you report that income, there were expenses you incurred to earn that income. It could be mileage, or you had to get certifications, or you had business meetings. So you're not going to report the whole gross income you've earned. And if you were given product as a form of like payment, that would be a kind of a type of income, like self-employment income, totally fine. But let's make sure we get some expenses to offset that for you too.
Yeah, at this point, my expenses are over $5,000. So I was like, well,
That's okay. So it'll be at a loss this first year. Most small businesses run at a loss those first couple of years, and in fact, that's why the IRS has what's called the hobby loss rules. So you can't be at a loss for like the third year because it could be the deductions could be disallowed as a hobby, but those first couple years. It's okay if you're not
okay.
generating it. As long as you
Uh,
put the ins and the outs, you're totally okay.
Thank you, Ria, because my CPA was trying to explain that to me. So I'm glad you said that. And then when should be the point? I'm sorry if I can ask another question.
Oh, go for it.
When we go from, me that I'm like, no, the mom, the server, and I'm just, low key to LLC, because things are starting to pick up for me. And I'm like, okay, I think I'm going to start making money pretty soon. So,
Oh, good question. Well, if you want to keep it simple for right now, you can keep it as a sole proprietorship, where it's just you have a disregarded entities reported all in at one return. But if you foresee yourself making like let's say for example, like a 70 grand net income, you might want to consider you can go up to an S corporation. The only reason I would say not do the partnership is because you're basically going to have to file 2 extra business returns, but you're not really seeing any benefit from that. If you do the S corporation, you're going to file the 2 business returns, but you have payroll now instead of having to pay
mm,
estimated tax on your guaranteed payments or on your draws from the business. You have, if you have yourself on payroll, you can just take your distributions, but you'll have your wage income and the withholding, so that will bring your tax bill way down.
okay, awesome. Okay, now
Mhm.
I'm not there yet, but thank you.
That's okay. No, for
Appreciate
sure.
it.
You're
Thank you.
very welcome.
Hi, can I ask a
Hey,
question? Sorry,
Yes,
I was putting the
please.
kids to bed and I finally got out of the room. So I'm like, I can actually put my camera on. Um, quick question in regards to,
Mhm,
I spoke to a tax preparer not too long ago,
mhm.
and I'm on the same page with Sabrina. And they were telling me, because I was between, and I've spoken to Eddie about this before, and he's right. He told me to talk to you. He's like, I don't do any tax info. And I'm like, okay. But like the LLC, right? So if I start an LLC, what I heard was that if I start an LLC and then I go to an S corp, I only have a certain amount of time to do so before having to pay a fee, like a big fee to go to an S corp.
Mm. Kind of, sorta. If you are starting off as like a single member LLC, for example, or just maybe you have two partners in your LLC, you have, what is it? Make sure I get this right. 3 years, 75 days from when your business formed to make that S corporation election. There isn't a fee necessarily that you'll have to pay. I don't know if he's referring to like a private letter ruling, which is thousands of dollars. That's usually not necessary. But if you want to make the S corp election, basically asking the IRS to treat your LLC as an S corporation, just like me, you file that form within 3 years and 75 days of formation. So if you're just newly formed, you still have time to go ahead and file the form. But if you're outside the deadline or outside of that time frame, you can do what's called, I've filed a bunch of these forms before, so it's no problem. You file what's called a late S corporation election and show them that you had a reasonable cause for not making the election sooner. And reasonable cause could be anything from like, I didn't know I had to do this, or I relied on improper advice, and I'd like to actually become an S corp now. And then, yeah, we can go ahead and make that election for you, and then move forward from there.
Good to know. My understanding was like
Mhm.
it was a lot sooner than 3 years. So I was like, oh my God, what do I do? I don't know what to do. Because like, of course, I want to be making more money, but I'm like, I don't want to then be like, oh, I should have done this instead. So thank you for explaining that.
Oh, definitely, definitely. Yeah, and there's still recourse to make a late election, so you're still good.
Okay. I'm far from that,
Mhm.
but hopefully, you know what? I'm not going to say that. I'm going to get
Mm,
there.
Yeah, you're gonna get there. It is. It's gonna happen.
I have a question really quick about how
Yes,
Sabrina
ma'am.
was. I beat you, Eddie. A lot of us are content creators. That's what UGC, so user generated content. And
Mhm.
so I understand, like she's saying, is, I didn't get a 1099 because it's under $600, but I did get, obviously a $3,000 item. But they
Mhm.
didn't give a 1099 even for that as a gifting. So obviously I do know the is that I have to listen, even if you guys are
Right.
drug dealers, you're actually supposed to claim that as well,
It
you
says that
guys.
in the
So
law.
it does say that. So again, whatever you're slagging over there, we gotta let them know that you're all chopo as well. But
Just imagining the Schedule C for that.
right. Well, actually, Betty on the corner. No, anyways. So if you're not getting those items, would you just let your, like, how would you know even the value of the item if the business isn't even sending you anything that shows, like, you're just assuming, like, well, I went on their website, I saw it's worth $2,000, but they're not sending you anything that actually says this was so. To let you know again, when we do
Good
content,
question.
you have to send me the item because it's the prop. I can't create the
Gotcha.
content with you for you. If you,
Hmm.
so for example, I just had a brand, it was an outdoor brand, and they wanted to do an exchange of content. And I'm like, but if you don't send me the item, I can't create the content. So I've never
Right.
received myself anything that's saying, here, we gave you this item. It is
Hmm.
valued at this. I do know that in the community, it is talk that, you do have to add that as if it is income because it's gifts, but we're not receiving anything from the brands that are saying, here, this is,
Mm.
we paid you $600, but we also gave you $1,000 item. How
Right.
does that work?
No, it's such a good question. And the thing is that those folks are supposed to create a 1099. They should have asked you for what's called a W-9, like at the beginning of your engagement, so they can get your tax ID number and report this stuff to you. And it's really for your own safety too. Just to take a quick sidestep, your self-employment taxes, you're paying into your own Social Security. So you don't want anybody to jip you on your income. So yeah, you want to definitely make sure they're reporting it, or at least what you could do is ask them when you at the beginning of the engagement if they could offer you the could advise you on the value of the item. You can use comps too, because IRS is all about using reasonable methods to come to your the amounts being reported on your return. As long as you're not pulling the numbers from the sky, and you can actually show, hey, this is what this would be. You know, this is how much this costs. This is my different comps, like for a house, for example. Then that would be an acceptable method if you can't get the value from the initial payer.
Awesome. So the W-9 kind of is, that was their way of telling us that they're on their end, they're doing what they need to do.
Exactly. You know, you fill out a W-4 when you get a new job.
Yeah.
W-9 is the same thing for self-employed or business. Yeah.
Oh, okay.
Mhm.
Excellent. Sabrina, you want to jump in real quick?
Yeah, just adding on that, because I save everything, and the gift to
Good.
collaboration that they sent, this one was from Canada, and it was shipped here, and they asked for my either my social or my EIN. I was like, I don't want to give my social, so anyways, I did my EIN, and it was just for
Good.
like shipping purposes. And I asked the brand, I was like, am I gonna pay taxes? They're like, no, if anything, we will cover the taxes. And when I got the boxes, I got the receipts, and they'll shows that all the products are here, and the total is 0.
Mhm.
So it's like shipped to me, but the price is 0. That like, and they, like they told me, it's like, no, we're paying and we're covering everything. And I'm like, in this case, for example, like, what do I do? Like, I just act and tell my accountant, okay, this is worth around this.
Yeah, you would want to share that. And that's interesting that they want to take the tax deduction for it, which is why they're offering to pay that. That's
Okay.
why they want to get the tax benefit from that.
Okay.
So,
Okay. But thank you.
oh, yeah, for sure. These are all really good questions, by
Joey,
the
do you have
way.
a question? I think that's a hand raised in the comment from Joey.
Yeah.
Yes.
There you
Hi. Good evening.
Hey.
That was an amazing presentation, so informative.
You.
My brain is just going all kinds of places, but I just want to start with the basics.
Yeah.
So I just got my LLC. I'm a general contractor. I
Congrats.
have a 501c3 attached to the LLC. I have no idea where to start. Where would be a healthy way to start in just collecting information in order to present to a tax preparer? Yeah, that's it. That's all I got.
Oh, coolio. Well, first, let me ask you, how are you tracking your information?
So I use the Square app to like
Cool.
document like all my payments. I started using like physical like receipts and putting them in portfolios per project because every project
Mm.
is like individualized. So I started doing that, but like it was informative to know that I can just use my bank statements, but I just don't really know like where to start even navigating that and what is like obviously the most efficient way to do it.
Mm. Oh, that makes all the sense in the world, especially for your particular industry. I would almost recommend if you can make the transfer to QuickBooks Online, that might be more advantageous for you. And they do have different levels to like self-employed, all the way up to like QuickBooks Plus, which is what I use. Within that program, you can actually use tags. And this will replace your accordion folder using tags and classes to make for your different projects. So anytime you get an expense, if it's running through your business bank account, you can actually tag it to the different projects. And so you can run a profit and loss statement or like your balance sheet, for example, the financials you normally provide to your preparer. You can run those financials to them and say, here was my income and expenses. Here's what I have on my balance sheet. If you're if you're an LLC, are you a single member LLC?
Yes.
Perfect. Okay, then we won't have to worry about the balance sheet per se. We just have to worry about profit and loss statement. Um, Within the software that you're using, are you able to generate like a year-end report?
I believe so, yes.
Cool, cool. Then that's what you'll want to present to your preparer is that year-end report, and then try to generate. No, I don't think you'll need to know it for the projects per se, but I would say generate that year-end report. And you want to make sure that there's nothing in what's called like the kitchen junk drawer, like ask my accountant or anything like that, because those are expenses that haven't been classified and you'd be leaving money on the table. With reference to that 501(c)(3), I know you had mentioned that it was connected to the LLC. Is it like a subsidiary or is it like its own entity?
It's its own entity. Brother Eddie did it for me, and
Sweet.
even I'm just so green, but learning how to navigate that is like also how would I incorporate like what would those be two separate? I know because they're two separate entities. Would those be two forms of like tax doing the taxes on those entities separately, or would it be combined?
I'm glad you asked that. Yeah, actually be two separate entities
Okay.
because the 501(c)(3) is going to file what's called a Form 990, probably a 990 easy or the postcard if you're smaller. And then the LLC, since you're single member, it's going to be it's California Form 568. So and then that'd be your business tax return.
And I
Okay.
understand you're very similar like Eddie. So I understand that you do offer a discovery call. How would the people that are listening or that are on the call, how would they schedule a call to have a discovery call with you?
Awesome. Yes, because I'd love to talk more about because nonprofits are a whole different kind of entity of their own, and there's certain regulations that you have to follow and get set up. And I'd love to set up a consultation if I can. I'll drop my contact information in the chat, and then
I took a screenshot earlier. I think it had the QR code.
oh yeah, QR code too.
Okay.
Absolutely.
And that was the 1-800 number, right? That was yours.
Oh, yep, that is me. Let me copy this. And then,
Is it 877-634-3377?
yep, that's
Okay,
right.
perfect. Okay, got it.
Oh, yeah. And then this is I just upload to the chat my link to my appointment calendar. So you can just, if you want to hop on my calendar at any time for the complimentary consultation, definitely feel free. It's already all caught up in everything. And we still have, oh, yeah, self openings. So. Yeah, because everybody's different and there's all kinds of different tax questions that come up, especially that first year of business. It's so crucial to get yourself set up on the right foot. And you don't want to let too much time go past before you start tracking everything and getting that ball rolling because you're going to be working so hard at the end of the year. And that's what we want to avoid for you.
Amen. Okay, thank
Mhm.
you.
Absolutely. My pleasure.
And Amber is a part of the school community. So
Woo, woo.
if you're a part of that, I would just blow up and just message her 100 questions. She
Yes,
doesn't have
please.
anything else to do except look at spreadsheets, and she has the calculator. Listen, this is how you know she's serious. She has a calculator with the receipt paper on it.
What do you have to say? I like that.
What do they call that? A number machine or something?
The
But
adding machine. Yes, I
adding
don't even have to look
machine.
at it anymore.
So yeah, I've been in her office and it's crazy. I'm like, what? Why do you have receipt paper on a calculator? But that's how you know she's official. Yeah, Jennifer. I got one more question. I
I
actually have
love
a,
it.
but I messaged you today. Okay, so I travel a lot and I only travel if it's ordinary or necessary. And when does my travel, I just went to Atlanta for business. When does that trip become a business trip? I left on Friday morning at 7 a.m. When does that become a business trip? Does that become a business trip on my way to the airport or when I land in Atlanta? What's that look like?
On your way to the airport. As soon as you leave, you're on your business trip. So it'll be the mileage you get to the airport.
Okay, awesome.
Yeah, the shuttle.
What's up, Sabrina? Go ahead.
I mean, if no one has questions, I can ask.
Yes, do it.
Okay, so I can prepare for this thing, the expenses that I have. Uh w- what's the truth about, that I can claim my house? So I don't pay the mortgage. I have my partner, we're not legally married, but he pays the mortgage, but it's our house. But uh, you know, how what's true about that? Does they say like, oh, you can claim, you know, a part of your house as in like your office and the internet? And I'm like, what's true about all those things that you can use as expenses?
Oh, yes, this goes back to our home office deduction. Yes, you can take part of that, like especially if you're paying into the general fund of the general fund of the house. You could say, for example, you're not paying the mortgage interest. Let's say you're paying rent, for example, and you determine what a fair market value, and that's completely up to you to determine what that fair market value would be. And you can say, okay, I'm going to pay my office rent. So that's in place of like the overhead of the building. And then we're going to take your utilities, and that includes like cable and internet as well. Utilities. What else am I missing here? Oh yeah, any kind of insurance too. Like the homeowner's
Oh,
insurance. Yeah. So we're going to take that too. And what we're going to do is you'll just need to know the total square footage of your house and the square footage of your office space. And it's going to be the office space over the house, and that becomes a percentage, and we're going to apply that percentage to all of those expenses.
and even though it shows in my domestic partner bank account, not on mine.
Right, because you're not deducting the mortgage interest. We're just going to just take some, and in fact, we don't even need to do the rent. We'll do the simplified method for you, where we'll just say $5 for every square foot of office space, make it even easier. So
So
let's say
my office is gonna be the biggest room.
that's right. Take the biggest room and the bathroom.
Thank you.
Sure thing, sure thing.
Well, Amber, I want to thank you for all your expertise. This was beyond amazing. Um, one tip, you guys, I'll tell you that I use. I put, and Rachel can attest to this. I put 100% of my business expenses on our American Express business card.
Mm.
The reason I do that, now Rachel is a receipt lady and she always asks me, why don't you save receipts? And I'm like, I don't do that. But the reason I use American Express or whatever, card or institution you may use, because at the end of the year, I can pull a year-to-date summary and it categorizes all my expenses
Mhm.
from travel to utilities to courses and events. So for me personally, when I'm operating my side of the business, Rachel and I, we do run the business together, but I always say she's on floor 5 and I'm on floor 4. But when I'm running my floor, everything is digital, and that just seems to work for me.
Right.
IRS has not came to my door. Amber is not pissed off. Yeah, I think you did amazing, Amber. You know what? We could
Thank
keep
you.
all night, but I'm gonna share one more slide. Rach, you got time to go over this last slide?
Yes, definitely. Thank you,
I
Amber.
don't know
That
if
was
she
so
said yes.
awesome.
Absolutely my pleasure. Can't wait for the next time.
Well,
Yeah, so I think he's
I'll
gonna,
go over it.
Thank you.
So
Thank
this is
you.
our
maybe
school
he can't hear
community, you
me.
guys. This is, we got people like Amber providing a bunch of expertise. And like Rachel said, we have people from hobby to sole proprietor. We have Uber drivers. We have, real estate and
Did he break up for you guys too, or just me?
Oh, me too.
We
Come
can hear you.
back.
Yes. Okay. So he was just sharing with you guys. So we do have a school community. It is all different levels of businesses. So we have everything from people that are doing this as a hobby. Eddie is a business coach. So he teaches you again when it's the right time to do an LLC. And then we do have team members. So Amber is somebody who has, again, she's actually I don't know if most of you know, but I've been an entrepreneur since 2012. I started in network
Mhm.
marketing, and she has done my taxes for 13 years. Very well equipped, and just again, using resources that we have available. So even just setting up a call, one thing that I had to learn as well is that especially when you are dealing with multiple streams of income, I know that again we want to go like, well, let me just go to H&R Block, or it's not as much. But then you actually work with a professional tax person and you're like, actually, the price difference wasn't a big difference in the cost, like the investment of what it is worth. And then you also
Mhm.
get to, I believe, write off your tax prepare fee, like as a
Yes, you
business owner,
do.
right? So
Mhm.
that's why you really want to work with people that are very
Mhm.
good at what they do. Amber is, again, a tax consultant, but she's also so specialized in small business that she will find the little things that, like she said, she goes money digging, where she'll be like,
Mhm.
you know, like, and so for those that are on the call, your cell phones, your internet, your mileage, your food, and she'll
Mhm.
break it down to, again, where like she's saying, not the birthday party, but again, if you are doing content and you're doing those things. So, you know, I know she shared her discovery call, and then we do have a school community where, again, we have everybody from Uber drivers to real estate investors. We have architects. We have all different levels of business. And we also share, again, business funding, how to get business credit, how to do all of those things. Eddie's going to just show what we have. So we have mindset, we have branding, marketing, business banking, business travel, business credit. We have a bunch of templates. We also have what's called a lifestyle analysis. That's actually my favorite. And a lifestyle analysis is just, it really helps you to see where your money is. So we do have a tracker. It's an Excel tracker that all you do is you punch in your numbers, and it's a monthly tracker. You can use it for your personal home, because, again, like, if your personal is kind of in a mess, guess what's going to happen when you start a small business? It becomes a little messy too. And so we have trackers in there as well. We record all the calls. These calls are open. We've, you know, Eddie and I have just been such givers. We just feel that invite everybody. And, you know, so again, we do have this school community. We have a call every Tuesday and Thursday, a live call. Eddie also has a free discovery call. So if you are looking to become a business and, again, go from, you know, I am doing this as a hobby, and he'll break down, again, Amber, like he'll say, I won't give tax advice. I know some of this stuff, but I'm not going to give it. And that's where you learn that you just, plug and play, you know, you plug it to the right person. And so he can help with everything business. So again, we'll drop the school community. Thank you guys for hopping on. And Amber, again, you're just always so thorough in just your teaching. You're such a great teacher. So thank you
Thank
for
you.
sharing with us tonight, and excited to, I know last year we also have a photo booth business, and last year I was referring her to everybody, and everybody that is referred to her just raves, because, again, she knows her stuff. Like, she has that, like, I want to play this game and I'm going to go find everything. So thank you again for
Exactly.
tapping in, everybody, and we will see you guys on Tuesday's call. Bye, guys.
Bye.